We're into Q4 of 2022, and what a year it's been in the real estate world. From experiencing the highest of highs in February and the beginning part of March to witnessing 5 rate hikes throughout the latter half of the year, the market has certainly taken a turn. But before I dive into everything, if you guys want to book a call with me to talk about real estate, you can click the Calendly link below to book a buyer call, a seller call, or just talk about the real estate market in general. And just a reminder to subscribe, please, if you do find this content useful. It helps me get my word out to more people like you. Now, in March, the Bank of Canada overnight lending rate was at 0.25%. Jump ahead to today, the Bank of Canada overnight lending rate is now sitting at 3.25%. So we've seen a 3% rate increase in the past 6 months. Now, we haven't seen rates go up that quickly in that short amount of time since 1981. So we definitely are seeing the effects of that play out in the local real estate market. What's even more surprising is that we've been told that the Bank of Canada is not done raising rates just yet. The next time that they meet is on October 26th of 2022, and we are told that rates most likely will go up again. Although interest rates have definitely had an effect on the local real estate market, when looking at the real estate prices and comparing all asset class, so detached, townhomes, and condos, to the price points at this time last year, we are still up in all asset classes for the sale price amount. Here we can see detached homes across the valley are still up 9.8% from this time last year. Townhomes are up 16.1% from this time last year, and apartments are up 18.4% this year. So that's quite interesting. We can see condos are still up quite a bit from this time last year. So as we all know, the detached market gets hit the hardest, followed by the townhome market, and finally the condo market. But what I did find interesting is that we are down from all the gains that occurred at the beginning of 2022 at the peak of the market. So we can see here is the peak of the market. Fast forward to today, we're sitting at just over $1 million for all asset classes in the Fraser Valley in terms of benchmark pricing, and that's somewhat comparable to December of 2021. The lower end detached market is starting to heat up. So anything priced just below that $1 million mark, which yes, that is possible to get into something in that price point now, those are really in demand. And the reason being is because when you're under that $1 million mark, you don't need 20% down. So the rule is it's 5% down up to $500,000 and then 10% down on any amount between $500,000 and $1 million. Obviously, it's a lower price point, more people can afford it, but it's the down payment amount. You don't need that $200,000 plus to put down on a property. Again, you need the 5% up to $500,000 and 10% between $500,000 and $1 million. So because the down payment's a lot more affordable, we're seeing a ton of people get into that market. So they're upsizing from, say, a condo or a townhome. They still have equity built up in those properties that they own, and the down payment now becomes very realistic to them. Let's go over everyone's favorite months of inventory. Again, this measures the absorption rate on the market, and it also gives us an indication of what market we're in, whether it's buyer's market, a balanced market, or a seller's market. All right, so months of inventory for the entire Fraser Valley. We have detached homes are sitting at 7.1 months of inventory. That's indicating a buyer's market. Townhomes are sitting at 3.9 months. That is a balanced market. And condos are sitting at 4 months of supply. That is also a balanced market. Langley condos are sitting at 3.7 months of inventory. Townhomes are at 3 months of inventory, and detached homes are at 5.3 months of inventory. Surrey condos are sitting at 3.8 months of inventory, townhomes at 5.3 months, and detached at 8.7. Abbotsford condos are sitting at 5.9 months, townhomes are at 7 months, and detached Abbotsford properties are at 7.6 months, indicating a buyer's market. I'm getting asked quite a bit, what's the overall consumer confidence right now in the marketplace? There's definitely people that are still wanting to wait and see what happens, and rightly so. You know, rates we have been told are going to go up yet again, so it just makes sense that we are expecting to see the price points continue to fall, and with that happening, we are seeing buyers kind of pull back and wanting to wait and see, because everyone does have a fear that they don't want to be that person that overpaid. Obviously, that's not an ideal situation for any consumer to be in. If it's your principal property and there's an emotional connection there, you want to be in that neighborhood, you want your kids to go to that school, you're going to be there for, the longer term. We're still seeing things sell. It all depends on your situation as a buyer and kind of your long-term goals, what you're planning to do in that property. For investors, especially in the pre-sale market, people don't want to be paying the price today on a project that might be done in 1-2+ years, because as we're expecting, it would make sense that the market, at least for the foreseeable future, say 6 months or so, price points continue to drop as the rates are expected to continue to rise. I hope you guys found this market update useful. Sorry, I am really late on this one this month. If you guys want to book a call with me to talk about real estate, you can click the Calendly link below to book a buyer call, a seller call, or just talk about the real estate market in general. I'm always happy to answer any questions you guys might be having. And just a reminder to subscribe, please, if you do find this content useful. It helps me get my word out to more people like you. So I really do appreciate you guys' support, and we will see you soon.